Welcome. Today I'll be talking about an endowment insurance policy. Before I go into that, I want to let you know about something. All right. I am an experienced insurance salesperson. I had over 6 years of experience in insurance before I decided to resign. So every information you're getting here is for someone who has experience in that field of insurance. Okay. So let's get to the real thing. Okay. An endowment insurance policy is a type of insurance policy whereby a policyholder picks it to save some money and at the same time get a life insurance cover. All right. There are different categories, or will I say types of this kind of insurance. Okay. Example is cash flow. All right. Every company has a name to give to their own insurance policy like this. Okay. In cash flow plan applies in some companies in South Africa, in Nigeria. This is a kind of plan whereby you pick, right? You go to an insurance company and tell them you want to save for a certain number of time. They'll provide you with that insurance plan and you save maybe for 5 years or 6 years, depending on how that insurance plan is structured. Okay, so when it gets to that maturity time, the insurance company pays you the money with the accrued interest. Okay, in the course of saving in this kind of life insurance plan, if you die, right, what happens is that that amount you're supposed to save at the end, which is called the sum assured, will still be paid to the beneficiary you filled when you are signing up for this insurance policy. The beneficiary can be your child or can be your wife if you are married. Okay, so at the beginning, the sum assured is already calculated. This is how much you are going to get at the end of the saving. All right. So if the person policyholder dies in the process of saving, that money, though the dead person, this is deceased have not saved the amount, all right, the amount to the end, that money calculated at the beginning will be paid to the beneficiary. So that is how this endowment insurance policy works. But if the person does not die, which we pray doesn't die, he gathers the money at the end with the interest and use it for the purpose he wants to use it for. So it's like achieving two things in one. One is that you get like for life cover, all right, because it's a life insurance policy. And number two is that you'll be able to accrue a lot of money at the end, all right, and they use it for something reasonable. There's another example of this type of insurance plan, just like in Gerber Life Insurance Company in the United States. They have a type of insurance which is under this category. They call it the Gerber Life Insurance College Plan. All right. So this kind of policy is a type of policy where a parent or a guardian picks it for a baby, a kid, to save towards the college education or towards university. Okay. For this insurance company, the Gerber Life Insurance Company, all right, in United States, the minimum duration you are expected to save before you have access to that money is as from 10 years. All right. So it's not the kind of insurance plan you pick, you save today, maybe in 2 months, you go back to the insurance company and tell them that you need your money. No, there has to be years of savings. You save for 10 years to 20 years. The maximum number of years is 20 years. All right. So take for example, you give a child today and feel like, okay, I want to save for this child's future education. You can go and pick that insurance plan and save for straight 10 years. It can be saving monthly. So every month, some amount of money gets debited from your account. Or you can decide, okay, I want to be paying by myself. But in most cases, it's better you place it on direct debit. Link it to your bank account so that every month the insurance company debits you. As a person, I have with my child. As a Nigerian, I have for my child. All right. I have two with Sanlam Insurance Company in Nigeria, and I have another one with Prudential Zenith Insurance Company. These are popular insurance companies in Nigeria, life insurance companies in Nigeria. Okay, so now another example of this kind of insurance policy, life insurance policy, is Flexi Education Plan. All right, Flexi Education by Salon Life Insurance Company in Nigeria. Okay, so ask if you like this kind of insurance plan, ask around in your locality and look for insurance companies, life insurance companies that does this. It will help you maybe to save money for yourself, or to save money for your child's future education. Even if you opt in at the beginning that you want to use this to save for your child, and maybe when the policy matures, that's the time frame, maybe by 5 years or 10 years, depending on the duration set by the company. When the policy matures, the money gets paid into your account. So if you like, you can use it for something else other than education of the child. All right. So let's talk about other things about this life insurance policy. Okay, I have a question I prepared here. How endowment life insurance policy are designed? All right. How are they designed? What happens if you terminate before maturity? This is important information you need to know. And that is why you need to ask your agent some questions before signing up for this kind of insurance plan so that it wouldn't be as if you get deceived in the process. All right. One thing you should know about this is that this insurance policy, type of insurance policy, has specified time for maturity by different companies. What it means is that if you decide to terminate or withdraw from the money you saved before maturity, something is likely to happen, maybe charges. All right. So it's important to ask your agent, what happens if I want to terminate this insurance policy before the maturity? Take, for example, is 5 years plan, and maybe you save for 2 years and you decide to withdraw the money. The company is going to pay you that money, but they are not going to pay you the total amount of money you save because it has life cover as well. Yeah. Okay. So that's why you need to read through the clauses that is attached to that, or ask your agent. Because, for example, now a Salon Insurance Company, if you save for 2 years, up to 2 years, now if you save for 1 year, but up to 1 year, but less than 2 years, and you want to terminate that policy, you're going to be charged 50% of what is there. Take, for example, you save $500 in the next 2 years, within 1 year to 2 years, and you want to terminate that policy. The Sanlam Insurance Company is going to charge you $250 and give you $250. Are you getting that? So you are losing. So the best you can do is to stay till the maturity time, which can be 5 years or 10 years, depending on what the contract states. If maybe it's a 5 years plan, just like Sanlam, I'm using for example, and you want to terminate in the 4th year, you're going to lose 10% of that money. If, for example, you save $100, you're going to get $90 and you lose $10. So it's better you stay till the maturity before you talk about liquidating. All right. But for some companies, I know Prudential Zenith, if you want to opt out at the 4th year, if, for example, you sign up for 5 years, they're not going to charge you anything. So it depends on the company, how the company designs such. Okay. Then another question I have here is what to consider before choosing endowment life insurance plan. Understand the technical terms. Very important. If you don't understand any technical term, ask your agent. All right? Because some endowment insurance plans have higher monetary return than the others. There are those that have high risk attached to them. But it's when you ask your agent that is going to explain all these things to you if he is sincere. Okay? Then years to wait. I've told you that before. Ask your agent. He or she will tell you the number of years you need to save before you withdraw. The sum assured, how much are you going to get if at the end I'm able to save to maturity? Ask him that question, okay? You need to be specific, all right? How much I'm going to get when I'm saving some amount of money per month. That's important. Then let's talk about another thing. What does an endowment insurance policy when does an endowment life insurance policy lapse? This is very important question. Yeah, I want to take my time to explain this. Please, when you are signing up for endowment insurance policy, and after that, when the policy is in force, at the point you stop paying, every insurance company has what I call a grace time. It can be 1 year. If you don't pay for up to 1 year, if you don't pay your policy or your premium for 1 year, you may lose everything you have saved so far. Yes, there's some company they will tell you that the policy has lapsed. What it means when you talk about lapse, it means that that policy is inactive. You're not going to get anything in return from there. Okay, so ask the agent. There's some that give only grace of 6 months. Once you don't pay for 6 months, all right, in a row, that policy is going to lapse. So the best you can do to yourself is keep paying every month. Even if you want to skip, don't skip more than 2 months interval. Okay, it's very important. So I believe this video is self-explanatory. You understood everything I said here. So if you like content like this, consider subscribing to this channel. Okay, hit the like button, the one that points up like this, and leave a comment. Let me hear your say. If you have questions, please do ask me. Don't forget to hit the like button and subscribe. You can watch the video up here to learn more. Thank you and see you some other time.